I don't know why I said that.
I don't know why I said that.
Hey everybody, my name's Aaliyah and welcome to the channel Journey to the Bag. So today we are going to talk about buying your first home. I bought my first house when I was 23 years old, making a little under 70K. It was a 4-bed, 3-bath, 2-story, about 180K. It was fairly easy for me, but times have changed, so we're going to get into it. What do you need to focus on, and how's it going to look moving forward? First off is your budget. You might think you know your budget. The bank is going to tell you something different. So they're going to look at your debt to income. They're going to look at your loans. They're going to look at your credit cards, anything that you have to make a payment on every single month. Don't worry about your grocery bills. Don't worry about your dog's medication. If it's not a loan or a credit card, don't worry about it. You'll be all good. Find a broker. They're going to reach out to multiple banks and get you a pre-approval. So once you have your pre-approval, you essentially know how much you can afford. Let's say the bank says that they approved you for $250,000. Great. Now you can go on Zillow and start favoriting all of those awesome homes that you've been looking for. You go out and get a mortgage broker and you have to talk about what type of loan you're going to get. Are you going to do FHA, do conventional, do USDA, which is U.S. Department of Agriculture? There are different pros and cons to each one. The FHA, that loan is going to be anywhere from 0 to maybe 3% down, which is great for first-time home buyers. If you already have a home and you're purchasing a second home or an investment property, FHA is not on the table for you. You can only have one at a time. A conventional loan, you're probably going to have to put down at least 5%. Let's back up though. When you're talking about an FHA loan, there are certain things that they are going to require in order to approve you. And it's going to be a little bit harder and a lot more paperwork, only because it's more backed by the government and because you're only putting down a small percentage, anywhere from 0 to 3.5%. They want to make sure that you can pay it. For example, a lot of us have student loans. Let's say that you have $100,000 in student loans, but you only pay $200 a month, which is great. FHA does not care how much you actually pay. They're going to take 1% of what you actually owe. So $100,000, 1% of that would be $1,000 a month. So imagine your debt to income was looking really, really good because you only had a $200 payment for student loans. They're going to calculate it at $1,000. A conventional loan won't do that. Conventional loans will only look at exactly what you pay. They're not going to inflate anything. However, it's still going to be 5% down. So like I said, pros and cons. A USDA loan is normally for houses that are in undeveloped areas. There are a lot of USDA properties that you might not think are eligible. So definitely look into USDA. USDA loans normally require no down payment. However, you have to qualify for one. If you make too much money, you will not be approved for a USDA loan and you will have to go get an FHA or a conventional loan for that property. So make sure you look into that and check with your broker on what those terms are and how much you and your partner and whoever lives in your home make. So let's say you settled on your loan. We're going to say it's an FHA or a conventional loan, so you're putting some money down, right? You also have closing costs, and a lot of people forget about closing costs. Now, they can be negotiated, especially if you're the buyer. You're always going to want to ask for closing costs in your offer. However, I always think that I'm going to pay $15,000 in closing costs. I don't know why. It's just always been a number. I've purchased 3 personal properties myself in addition to investment properties. And I'm always calculating, okay, this is what my down payment is. I'm going to pay an additional 15 grand. 9 times out of 10, it's less than that, but you always want to overestimate to make sure that you have that extra money. And your mortgage broker or your bank is going to tell you the highest number, and it's going to work itself down. So your closing costs are going to include basically your normal due diligence, your fees for the bank, underwriting, your inspections, anything like that that has to do with that 30 to 45 day closing period of all those things you have to take care of, your closing costs are going to be included in that. Now, like I said, try to negotiate those down. You can ask the seller to pay for some of those closing costs in your offer, or a lot of things can be negotiated down with the bank. So ask your broker, hey, which ones of these are negotiable? Or do I need to pay for certain line items? You are probably going to get maybe 3 or 4 different copies of your closing documents up until the day of. And so every single time those numbers are going to change. Majority of the time, that number is going to slowly go down and go down and go down. But make sure you're paying attention to those line items, because a lot of those can be negotiated down depending on your bank or the area that you live in. All right, so let's talk due diligence. You found your home with your realtor and your offer has been accepted. That is great. So now comes the hard stuff, which is all of the inspections. So you're going to have a general home inspection that's going to include everything from the walls to the roof, to the water pressure, to the water temperature. Everything that you did not think about, these guys are going to cover. There's always going to be something. They are going to point out every little thing, which is what you want, right? If something is small, you want to be the one to determine if it's big enough for you to go to the seller and ask for something. So we want to make sure that we get all of our due diligence done. We want to look at the flood maps as well. We want to get a sewer inspection, especially if you are in the city. Your realtor is going to list everything that you can get. And look, I know that this stuff might seem costly. Some of these things can be thousands of dollars, but I promise you it's worth it. Now, let's assume that there is an issue that you would like the seller to take care of. It could be something small and it might take them a couple of days to call a handyman and get taken care of. That's one of the easiest situations. Now, if it's something a bit bigger, let's say all of the carpets need to be ripped up and it's going to cost 15 to 20K, that's not really something that you want your seller to take care of, right? You want to pick out your own carpet and your own contractor. You have a couple of options with that. Option number 1, you can ask the seller to take care of it for you, and you guys can work together on the contractor and which type of carpet or hardwood you would like and extend the closing, because something like that is probably going to take a little while. If you're not willing to do that, you can ask for a credit. If you estimate that it's going to cost anywhere from $15,000 to $20,000, and of course both realtors are going to be incorporated in the negotiation, let's say it costs $15,000 to $20,000 and you've agreed upon that, you can ask for a credit. A credit will be at closing. So instead of, let's say, $30,000 that you have to come to closing with, it'll be more like 15. My favorite option is a cold hard check or cash. So I want the seller to come to closing with that $15,000 to $20,000 and hand it to me while I'm handing my check to the closing attorneys. This is the easiest way. I would rather that $30,000 that I'm financing stay financed and give me the $15,000 in cash so I can go handle my renovations. That's the easiest and cleanest way, in my opinion. Now, let's say we are at closing and every once in a while a hiccup happens. I don't know how many times I've gone into a closing attorney's office and not closed that day. Too many times to count. Be prepared for it. It is okay. Your underwriting process happens sometimes up to the minute that you actually sign the paperwork. Some companies have a different underwriter every single week. You might have somebody underwrite and approve it, and then the very next day, somebody else is looking at it and they decide that they want something else. It's okay. Just work through it. I promise you, your realtor and your closing attorneys have been through this before. They'll let you know exactly what you need to get it done, and it might get pushed a couple of days, but it's all right. Congratulations. You have closed on your property and you have a brand new home. So remember, we have an FHA loan, a conventional loan, and a USDA loan. All three have their pros and cons. Make sure you talk to your realtor, your bank, and your mortgage broker, if you have one, on what you qualify for and what the home qualifies for, and also what you can afford. We also want to make sure that we do all of the due diligence that we can. If you think that it's not worth it, it probably is. So go ahead and knock that sewer inspection out. And then after that, let's make sure that we bring a little bit more to closing than we expect. Right? So we know what our down payment's going to be. We're going to estimate a little bit more than that. In another video, we'll talk about how you can possibly buy down your interest rate. Congratulations, the world is yours.